Hello and welcome to PreciseAlgorithmTrading.com. It's Tuesday, April 30th, 2024, and this is our abbreviated look at the markets this week. So this is going to be a quick one. Um, the Dow Futures automated trading system was down again today. Overall, yeah, just that one stop out hurt everything, but it actually had two winning trades out of three. The Russell continues to just have stop outs all a bunch in a row. I don't even know what the count is now. And the NASDAQ actually pulled back a little bit too, and I didn't drop the statistics for it, but it was a little bit of a pullback today and nothing really to write home about. Uh, Flip over to the index products. So here's the S&P 500 E-mini futures, and the actual S&P was down 1.57% today. The Dow was down, I should say, in 80 points, but the Dow was down 570 points. Looks like this. And down 1.49%. The Russell, which I'll pull up with the IWM, was down 2.03%. And the NASDAQ was down 2.04%. So, if you're following along, and what else we got here? Yeah, so I'll pull up the NASDAQ like this. I've added some new arrows here that I'm testing. They've got a volume bias behind them, so uh, they don't do anything but reinforce our systems. If you see here, the pink arrows still are going down and the blue arrows are going up, but they have volume behind them. So I've got some work to do, and some back testing, but this is promising. And all it does, like I say, our systems are actually pretty good the way they are, but this could be um, a little bit of an extra special, add some uh, validity. And I've never really attached volume to. I've messed with it through the years, but I've never found a good system, and I think this might be the one. So, anyway, I won't get into that too hard until we uh, test it all out and give you some statistics. So, the transportation index went down hard today as well, 2%. This does not look like it's going to be done anytime soon, although I could see a snapback rally in its future. Um, where does this thing look like it's going to bottom out? I don't know that it'll revisit these lower lows, but I could see getting down here. Um, but right now we're below the 2 ATR, or at it. We're below it on the hourly chart, and a snapback rally. Tomorrow is Fed Day, so the uh, Federal Open Market Committee (FOMC) is going to decide what they're doing with interest rates. There's something to the tune of a 97% probability that they're going to leave them alone, but the market's been wanting them to cut rates so that business can get uh, stimulated again, especially some of the real estate and things like that. Construction, not that construction's not hot enough without it, but the housing market's rough. So oil, we didn't look at oil, so let's look at oil. This is one of the promising things about this new volume-based indicator is I got a sell arrow here when I would have basically wanted to hold through that because of all my other indicators. That's a big deal when you see all the buy arrows along the way that are supporting price, and then you get the one seller arrow. It'd be a great time to take your profits. There's going to be some more things to it as well, but it's a good deal. I like when systems come together like that. What else? That's oil. Let's look at gold. Another example, same kind of a thing. It was all that buying along the way, and then we got a sell signal right there, which actually I believe it could be used for shorting as well. But again, I need to study this and do some work, and it might be a couple weeks. So, let's look at before I get out of here, the VIX, and let's look at in context with the ES. So, VIX pulled up hard, pulled back in, got this is technically a buy arrow for the market, but it's really just pulling back into the Bollinger Bands after it's outside of price. And you can see where we got that buying that happened because of it, or along with it, I should say. And then today's little bounce on volatility creates this. Now, if I didn't talk about it, um, I believe I did last night in the video, but we're up against this mean, which is literally between these two white lines, and I was expecting the price could go all the way up to the other moving average, which is, I believe this is the simple moving average, and this is the exponential 30. And the reason, because one's fast and one's slow, or I should say one's fast and one's slow. The simple is slower than the less uh, it doesn't move as much with price. It doesn't move as sensitive. It's not as sensitive. So, anyways, I was expecting it to actually possibly get up into there because of what's going on with the Fed. But at this point, I'm expecting really some volatility and then probably a bounce back up tomorrow because of what's going on with the Bollinger Bands, or not the Bollinger Bands, the Keltner channels on the hourly chart. The fact that we're outside of them, but anything's possible from here. I'm expecting at some point to put in a lower low. That puts a wave 1 down, wave 2 up, wave 3 potentially down, and putting in a lower low. At some point, we're going to finish with a ABC pattern probably, which is a Elliott wave thing, and then come back up again. So I don't think, because based on if we look at the weekly, that this thing's going to get too too crazy to the downside. I just think this is a setup for a sideways market, eventually back to the upside on a weekly basis. So these Harvard lines that we've talked about in the past should support the price at some point here. This lower moving average on the weekly should also support price, and that's right in line now with the blue Harvard line. So I believe we could get that far down. We're going to probably put in a new pivot dot to the upside, and then probably a new pivot dot to the downside before we even think about going back up again. If you look at this sequence back here on a weekly basis, we had a pivot. So we had 1, 2, 3, 4, 5, 6 pivots as far as the dots go, and this one moved down. And now we've got 1, 2, possibly one forming, which would be 3. We're in for at least a couple more, would be my guess. So, or my read on the market anyway. So, all right. Moving on to stockcharts.com. Look at the bullish percent indexes. I believe they were worrying me last night just because they looked bullish in the face of what looked like it was going to roll over. I'm glad I took some hedge positions and some shorts. So this one didn't move. The industrials, the NYA, down only 0.77%. The transportation index didn't move. The NASDAQ actually went up by 0.35%. The S&P 500 went up by 0.75%. The S&P 100 flipped around to a new column of X's. That's wild. And the the NASDAQ 100 tacked on a new X to the upside. So it went up 5%. So actually this supports, I believe, more in the longer term that things are going to hold together better. Anything can happen in the short run. We could probably get a lot of volatility until this thing works itself out. The Fed will be a big deal tomorrow, and it literally can go either way. Right now, um, we do have support with this golden line right here, which happens to be an Ichimoku Spawn B. That's a whole thing that we haven't really talked much about, but that possibly could provide some support in the short run here. So I just can't see this thing going back up and making new all-time highs without working this price out to the downside like it does in at least one of these types of three waves to the downside. There's one where it did go back up, so it is, it could happen. So if it happens, we'll follow the signals. Until next time, have a great night, and we'll catch you tomorrow. See ya.